and thanks to everybody externally who is attending this presentation today. I'm going to be focusing on Map Aktif and our Asian growth plans in sports and leisure over the coming years, in tandem with our CFO, Miguel Stahl. So first, I think it's interesting to set the scene for, where Map Aktif has come from since the very beginning. This was the first category that Map Group went into when the group started in 1995. And I'll also go through a little bit about how we've developed and where we are today, and then really where we see ourselves, in the next 2 to 3 years, because it'll be our 30th anniversary by 2025. So this presentation will take you through that and give you a really good idea of how we are focusing on the long term to really drive up the value of the company. So who we are, the chart is self-explanatory, but we started with a couple of stores in Plaza Indonesia in Sogo in 1995. In fact, I was there at that presentation, even though I was not part of the group then with Reebok. And over the years, as you can see, we've grown very, very fast. And it's also interesting to note that we've survived quite a few crises in this time, whether it was the 1998 Asian crisis or the 2003 SARS crisis or the 2008 global crisis with currency depreciation and so forth. But generally, we've always had a very resilient model, which has always allowed us growth. Of course, there's been a few hiccups along the way, but overall, we've had a very strong, productive model that has allowed us to grow. And as this model has developed, we still believe it's very, very strong to allow us a long runway for growth over the next few years. A quick summary of where we are at the end of half one of 2021. Over 1,000 stores, of course, in Indonesia across 78 cities. And as you know, we've started our expansion now into the ASEAN markets. This has always been part of our plans with growth in Vietnam, Thailand, of course, and also some fairly major expansion in Philippines. We have over 40 large exclusive brands under our portfolio. And as Mr. Sharma mentioned in MAPE presentation, we are strongly getting into the digital arena now. 4 proprietary multi-brand e-com stores are up and running, performing very well, and also 8 mono-brand stores as well. So when we went to IPO in 2018, we had 3 goals, and really we still have the same goals now. We haven't changed anything. We haven't changed our strategy. Everything has pretty much remained the same. Those goals were firstly to obviously execute digital change. We knew this even 3 years ago. We worked very hard in that area, and that's helped us to be in the position of where we are today, where digital is almost 13% of our sales. But of course, the really important part of what we call digital change was to really show the link between online and offline and how we could maximize the potential of both these channels by linking them through data, which is obviously what we call our unified retail channel that we heard in the last presentation. The second goal that we always gave to investors is we wanted to grow. We knew we had a very, very strong business model, and we wanted to show that not only could we succeed with this in Indonesia, but we could take it to other Asian countries. And many of our brand partners, exclusive brand partners, also told us the same, that they liked our model, they liked the way we worked, and they wanted to see if we could help them maximize growth in other markets too. So launching what we call regional brand commerce was a very key objective for us. And particularly with a focus on what we call the populous Asian markets, such as Vietnam, Philippines, and Thailand, which were the biggest markets. And when we added up the populations of all of those countries, it became the same as Indonesia. So suddenly you're selling to a market of over 500 million people, and that became very attractive to us for the long term. And linked to that, many investors were always asking us, we were generating so much cash over the years of 2015, 16 onwards, and investors were always asking us how we were going to use this cash. So we've always answered the same thing, that we would always look for strategic acquisitions that could be complementary to our present business model and help us grow for the long term again. So we've been doing this across Vietnam, acquisitions in the Philippines and also Thailand. And again, this has helped us put down roots to help us really drive growth for the long term. So multi-tier retailing, this is a slide really which tells us about our Indonesia business and how we grew so strongly and in such a dominating manner, if you like, for so many years. The differentiator on multi-tier retailing was we actually created retail channels for every type of retail, whether it was value retail, such as Sports Station, or whether it was premium athletic specialty retail, or a balance of sports and lifestyle, such as Planet Sports. And this was by providing all the different types of a retail store to satisfy every different type of customer in the market. It gave a brand the maximum potential to grow. And it was really through this type of model that we had brands which were exclusively with us, like Skechers, become the #1 brand in the market because they could maximize their growth across all these different type of channels. And this was a stat that came to us out of Euromonitor, who were monitoring the performance of market share for brands in this space. And I should add that in this area of what we call leisure or athletic specialty, we're not done yet on that expansion, and we'll be making an announcement over the next few days, probably, of further growth in this area with a leading player. So when we come on to our exclusive brands, it's a long list. All these brands work, with us on a basis where, we are the exclusive distributor. It's very similar to what we showed last year, but now we break out run and trail as a separate category. The reason for that is because since the pandemic really started, running's gone on to a much bigger platform. We've got much more people exercising, and we needed to make sure that we had a strong hold in this area. And it's interesting that of all these brands, Brooks, Hoka One, New Balance, Saucony, in the USA specialty running channel, these are the top 4 brands. So we have the top 4 running brands with us, from the US market, which really sort of tells us what the global market trends are, and they are with us here. So this is an area that we're going to continue to grow as we move forward over the next few years. Our digital sales platforms have also grown. Multi-brand, of course, Planet Sport, Kid Station have been in the market now for a few years. We're going to be launching linear shoes very soon, which covers our multi-brand leisure categories. Of course, with monobrand, we have a number of stores and platforms now open, and we will continue to expand with this with some of our key partners over the next couple of years. CRM and loyalty was explained in detail by Mr. Sharma in the last presentation, but Map Club literally is the glue that holds all our information together. I'll speak a little bit more about that as we move forward. And of course, we're on all the key marketplaces as well. As I mentioned earlier, our role in brand commerce is to maximize growth through all the different types of channels in the market so that the brand can reach its ultimate potential. And this is the key differentiator that makes Map Active, a different model compared to anything else that you see in the market. So for all these exclusive brands that we have, what is it? Many people often ask us, what is the secret formula that we have that nobody else has? And really, we explain it by these 4 pillars that we have here. I mean, essentially what we're doing is we are the one company who can provide access to a brand to offline sales through all the Map Group stores, but not just Map Group stores. We also sell to various wholesale accounts. We also service global retail accounts, who come into the market here as well as the brand distributor. Obviously, we're in the online sales piece. We can link all this data together with our CRM and loyalty programs, our product planning, and now we're getting into artificial intelligence to help us with our product planning. And then, of course, finishing it off, we have supply chain and logistics, which a number of years ago, may have been one of our worst parts of the business. But now, we can pretty much deliver anywhere in the nation within 2 to 3 days, including Irian Jaya. So it's now become an absolute positive part to our business. So when you link all these things together, this is what we provide to a partner. And the partner has to consider to himself, could I do this on my own? And of course, we already proved with taking Skechers to the #1 position in the market that we were able to make brands outperform themselves when they were able to work closely with us and take advantage of all these key things that we have to service them. As a result of various brands feeling really, really happy with how we worked with them in Indonesia, because of what I just explained as to how we could provide them with online, with offline, how we could provide them with unified data from online and offline sales, social channels through our CRM, and fast supply chain. Many of these brands came to us to ask, could we do the same thing for them in other ASEAN markets? So we knew we also had to grow and to expand into these other markets. So this was really a great way for brand and Map Active to collaborate together. So, I mean, traditionally, in Indonesia retail here, we've grown our business through all these proprietary multi-brand channels. Basically, to cover the whole market from premium to value, we had to create those retail channels because they traditionally didn't exist in the market. But when we moved across to the other ASEAN markets, such as Thailand and the Philippines, often these types of other retail channels were already there. Maybe there was athletic specialty there, maybe there was premium athletic retail there, or a few other channels in value. So we more focused with our brand partners on brand concept shops, online shops, and then servicing these other channels for them, in wholesale and other retail. And of course, linking it together again via our Map Club. So our Map Club model is also expanding to our ASEAN market partners. We will launch Map Club, I think, in Philippines by Q1 next year. And I think by Q2, it will be in all our countries. So this comes with us. And this is really the key thing that's going to make us succeed and is the differentiator between us and other companies. It helps us service our shoppers via physical, digital, and social channels, but also gives us the data on our customers so that we really know where they shop, how they shop, who they are, and so on. So this is something that, has been very important to our brand principles. And now many of the brands on these lists are not just with us in 1 or 2 markets, they're now with us in 3 or 4 markets. So this is how, we intend to grow this area of the business internationally. Just speaking a little bit more on how will Map Club then really help us get the edge on maximizing the growth of all these exclusive brands who we are partnering with. So essentially, we're utilizing customer data to develop more profitable selling strategies. And, the model really works, as we can see here. The Map Club database that we have, it's collecting data, it's crunching insights, and it's allowing us to do customized shopping, for our consumers. We can see what they bought last week and we can recommend them something new this week that is complementary. And this gives us an edge to be able to increase sales, increase turnover, and we're able to share this with our brand principals so that our brand principals get a full picture on the market that they're servicing. So again, we can get this data from our offline channels, from the marketplaces, from our brand online, concept stores, or through WhatsApp chat or the chat medium that exists in all these different countries. But the real key, the real value rests here with Map Club, which really is the glue that ties all of this together. And again, we're one of the very, very few companies. Actually, I think we're the only company in ASEAN who has a business model which can service all these different channels of offline, marketplaces, online, wholesale, chat, and have it connected into one system so we can analyze the data of who all those customers are to help us work further with those customers to retain them for lifetime value, along with us and our own growth trajectory. So this is a very, very important part of how we're going to grow our business over the next few years. So I'll pause for a few minutes and give our CFO, Miguel Stahl, an opportunity to share with you some of our key financials over the last 12 months. Miguel.
Thank you, Mike. So in terms of revenue, as Mike already mentioned, we're basically back to growth. We're back on track. Sales increased 35% in the first half of 2021 compared to the same period of last year. And we had a very strong Lebaran. Actually, that led to Q2 2021 being one of the strongest quarters since COVID began.
Not on the screen. No.
I mentioned Lebaran 2021 was very, very strong. Of course, it was followed by a bit of a dip going into the July lockdown. But I think what is very important to remember is the basic investment case, right? Which is only actually accelerated during COVID, which is we're playing in the strongest growing retail segment in Indonesia. Everybody wants to become more healthy. People don't go in suits to work anymore, but they're actually using athleisure products. So in that sense, the basic investment case for Map Aktif is still there. And we actually believe post-COVID, we're becoming even stronger out of this crisis than we were before. A big part of that growth clearly is digital sales. Quarter on quarter, our digital revenue increased 20%, which contributes now around 12.5% of our overall sales. A major driver of that is our planetsports.asia and also our monobrand stores online, which we have launched, such as Skechers, Converse. They're showing a lot of promise. But we talked about the importance of MAP Club already, but also marketplaces are basically complementing our overall digital strategy. Tokopedia, we have a sports station on Shopee, and we're also present on Lazada and some others. If we look at the major P&L developments, I talked about our revenue increase 35%. Important to note as well is that our gross margin is significantly up from the same period last year in the first half of 2021 by almost 3.4%. And I think that's, first of all, testament of all the investments that we have made over the past couple of years in terms of merchandise planning, making sure that our data analytics is well in shape, and that actually caused our gross margin to increase quite significantly. Our overall inventory situation is good. Clearly, of course, our inventory has been going up a little bit versus what we saw pre-COVID, but especially if we look forward, our inventory situation is not too bad. Our operating margins, I think Ms. Sharma and Mike already alluded to it, improved significantly because of efficiency and cost reductions as well, leading to our net income overall to increase by 215%. A major thing, of course, during COVID is cash. It's a little bit of a cliche, cash is king, but it's very, very important, clearly. And because of our inventory management and because of our prudent CapEx outlay as well, actually, we have been able to use the cash to actually gear that towards strategic investments, both in international as well as digital. Throughout, our net cash position was maintained. And I think going forward, of course, we will definitely, post-COVID, start generating cash again. MAP Aktif has always been very much cash generative business overall. Overall, that leads to the financial summary, 35% overall net sales growth, 43% margin. There's a little bit more upside to that post-COVID, clearly. We've been at around 45% in the past. And our net profit overall moved back to profitability. In the first half, we did 92 billion in terms of net profit overall. I mentioned already before, quarter on quarter, actually, the second quarter was very strong, even stronger than the first quarter of 2020. And of course, there will be a bit of a bumps along the way. I mean, nobody will know how COVID will develop. But what we are pretty sure about that once COVID is over, we are coming back very, very strong, as Mr. Sharma highlighted as well. Gross margins, I've talked about a little bit as well, and maybe in the interest of time, I won't discuss the balance sheet, but maybe we can go to the conclusion overall. Mike?
Yes, sure. Thanks, Miguel. I mean, really, I think we're still in very, very good shape despite what's happened. And anyway, we've been used to many crises in the past, but our goal is still the same as it was in 2018 when we went to IPO. We're very much focused on the long term, and we continue to invest strategically to help that growth, which basically means more markets. In more markets, there's more people. It means we can take more exclusive brands and work collaboratively with our partners to do that. And of course, it leads to more sales and overall more potential to grow. And I think all of us will believe one thing, that ASEAN is still one of the greatest regions for great fundamentals. Rapid GDP growth will start to kick in again from next year. You know, there's a 500 million plus population. So we've now doubled our market base from what we had in Indonesia. There's over 400 million people using smartphones, which ties in perfectly with our digital strategy. And finally, we all agree, I think, that health and fitness for all age groups is going to be an absolute priority for everybody in this region. And never has that been so apparent since the COVID pandemic hit. So we think it's a very, very strong runway we have for growth. We still believe in the long term, and we think there's a very, very decent future ahead for us. Thank you very much.